Rohr here with an early, concise highlight on Tuesday, October 14th, 2014. It's getting to be 7 a.m. U.S. Central Time. And there's quite a bit of macro influence, even outside of economic data, that has been quite important and helped drive the weakness of equities late yesterday. And in the first instance, we had the geopolitical dominating with ISIS and Ebola. And both of these have created a lot of uncertainty, as some people have said this is impossible to model. So what does all this mean to the markets? Well, in the first instance, it looks like after trying to hold a key level that we had isolated previous, that 1885 was the key support in the S&P, it looked like it might be trying to clean up yesterday, but not only was 1900 the previous area lows for the lead contract at an important psychological level, but it turned into the resistance on the aggressive downward channel the market had been in into Monday morning that the market just couldn't break above. And once it started fading again after lunch, it was vulnerable, and the psychological macro factors came in to knock it by late in the day on uncertainty. What's also very interesting, once again, you'll note how going back to Friday into lunchtime, the market had tried to rally, but the more sensitive 30-minute MACD could not really get above its lower runaway band, left even this indicator, which sometimes can improve even while the hourly MACD remains in a stale condition, even that couldn't get above it. And lo and behold, look what happened yesterday. And so with all of that, what we have is a market that has resistance now back up at 1885 area, and again at 1900, very important psychologically as well as technically, that has lower supports now for reasons we'll see on the intermediate term charts, not until 1850 to 45, and the bigger supports don't come in until down around 1810 this week on the more major weekly chart channel. And that pretty much does it for the S&P 500 short-term view.